Picking the direction of the stock market can be a difficult task. Even CEOs of companies don't know which direction their stock price will go. There are pandemics, banking collapses, wars, and other possible geopolitical events that all affect the stock market and can make it move drastically at almost any time in either direction. In this video, we address the questions: should you trade both sides of the market? How much should we trade long versus short? And how do we trade both sides, long and short?
Hey guys, Darren here. Thanks for joining. We talk about action steps you can take today to increase profits and reduce risk in your options trading portfolio. Please check out and download the free options workshop in the link below.
It talks about the two main reasons why options can be less risky and more profitable than just buying stocks alone. It also details how to profit in both directions and pick your win percentage, which you can't do just buying stocks alone. Also, please hit the like and subscribe buttons below. I appreciate it and it helps the channel. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. Should you trade both sides of the market? Guys, this is a no-brainer. The markets move both up and down in the short term. So yes, we should trade both sides to reduce our risk, improve our cost basis, and profit in both directions. We may have a long-term bias on a particular stock like Tesla. Maybe it's trading at $195, and in our mind, we have a 6 to 12 month target of $220 where we think it will be trading. So we decide to sell a put vertical. We go to the trade tab on the Tastyworks platform. It's the best option trading platform. I'll put a link down below. We punch in TSLA in the upper left and make sure we are on the trade tab. We then click on the 190 bid and the 185 ask to sell the 190, 185 put vertical. We collect $1.95 times 100 shares, so $195 for selling the spread, and our max loss is the width of the spread, which is the $5 minus $1.95 premium collected, so it's $305. We click on the curve to switch to curve mode. We see the huge profit range in green. As long as the stock price stays above the 190 strike price at expiration in 31 days, we keep the entire $195 that we collected up front when we placed the trade. How much should we trade long versus short? Since we trade around 45 days to expiration, the stock market in general can move up and down. So we should always have trades in both directions. This way we can profit on big down days as well as big up days. I like to look at the SPY, which is the S&P 500 trend lines, and see where we are today versus the historical S&P. Now, trend lines can be drawn and interpreted in different ways. Here you see a more bullish trend line and a more bearish one as well. This is just a tool, and other factors should be taken into account as well. When we are above the SPY historical trend lines, I like to have more short positions on, hoping for a market downturn. Likewise, if we are below the trend lines, then I like to have more long or bullish trades. We can also look at the PE ratio. Currently it's 19, which is a little above the historical average. I like to be more long or bullish when we get down to the 15 to 16 PE level. We are also in a recession. We have rising interest rates and recent banking closures and issues in the financial sector. So there are risks that the market may sink lower. How do we trade both long and short? Well, we just showed a long trade in Tesla. So now let's look at how to place a short trade in SPY. We punch in SPY in the upper left. SPY is trading at $397. We click on the bid to sell the 407 call and the ask to buy the 412 call. We collect $180 and our max risk is $320, or the $5 wide spread minus the premium collected. We look at the curve mode and see that as long as we stay below the 407 short strike price, we keep all of the $180 collected when we place the trade. We hit review and send and place the trade. Now we have a long trade in Tesla and a short trade against it in SPY. So we can collect profits on both sides of the market. What is really nice is that we can take profit when it happens on the winning side and then roll the losing side out to the next monthly option cycle and wait for the market to turn the other way. So eventually we win on both sides. Sometimes it stays in the middle and we win on both sides right away.
All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Also, let me know what you thought of this trade and what you're trading in your options trading account. Thanks for watching, and see you in the next one.